strong buying interest in BUA Cement is pushing some bullish undertone in the equities markets. However, there is still looming bearish sentiments following the sell-offs witnessed in Nestle, FBN Holdings, and GTCO. AbdulLateef Grillo, analyst at Meristem Securities, joins me now to discuss the key drivers of the market's performance. Thank you so much, AbdulLateef, for your time today.
Good afternoon, Wale. Thank you for having me.
All right, so let's get your thoughts on where the market is headed, because last week I think many were really concerned about decline, especially on Thursday. We've seen a slight recovery since then, on Friday, of course. But then where do you see the market headed from here?
Okay, like you said, there was the sell-offs in the market persisted last week, especially on Thursday, and that was actually due to some profit taking, particularly on Airtel Africa, which is the most capitalized stock on the exchange, and which lost 10% on that day. So while we saw a slight recovery in the market on Friday, the week still went on to close negative, about 3.4%. So for this week, actually, it seems like the negative sentiment in the market still lingering. That's bearish sentiment still remains in the market. So we don't expect to see so much of bargain hunting activities in the market this week, especially because there's also a treasury bills auction scheduled to hold tomorrow, which is also expected to stifle liquidity in the market. So this will also constrain liquidity available for people to invest in the equities market. So we do not expect to see so much of bargain hunting in the market this week, especially except of course we see some activities on large cap stocks, the like of BUA Cement, which sort of moved the market intraday today.
All right, so let's unpack the key drivers of that negative sentiment that you spoke of. No doubt, the fixed income market's attractive yields, I imagine, may be one of the contributors to that. But then, do you think there are other macro factors and maybe even the outlook for company performance that is also driving this negative sentiment?
Definitely, like you mentioned, the key, the fixed income market is a key influencer of investors' decision to not to invest in the equities market as much this period, because we are seeing yields increase rapidly in the fixed income space. See, treasury bills yield, for example, at the last auction got up to 12%, and this just seems very attractive for investors to invest in. And also there are quite some uncertainties about the economy generally. If you look at growth, the general expectation for growth is that it will most likely not be as strong as what we have witnessed earlier this year. We can see a decline in purchasing managers index already, and also the activity around FX. A lot of people that just influenced the decision of a lot of investors and tilted it more towards investing in foreign exchange denominated investment, or just changing their money to dollar instead of investing in the equities market. So the uncertainty, the general uncertainty in the around the economic indicators really is also one of the things that is influencing the equities market at this point.
All right, so let's talk specifics. What do we do? In this downward trend, do you see pockets of opportunities, or would you be one to suggest that investors should sit on the sidelines and let's watch this for another week or two?
Okay, so definitely at this point, we are seeing a lot of stocks hit their 2 years, 3 year low points, and that really presents an opportunities for investors that are trying to position for the long term. So it's like a lot of stocks at that price, which is quite a very good entry point for investors who are very keen on long term, or investors who just prefer to buy stocks for dividends, because in the short term now, it doesn't seem like we are going to see that rapid increase in prices of stocks in the short term due to the activities in the fixed income space. As that is continue to play out, we are still seeing rates in the fixed income primary market auction, both for bonds and T-bills, increase. And as this continue to persist, investors will definitely favor fixed income investments, thereby taking their money away from equities. So what this means basically is that we might not see that increase in prices in the equities market soon. So the equities market will be mostly suited for investors that buying for the long term, right? That are willing to hold on for the long term right now. And then again, in the fixed income space, there are opportunities springing up in that space for bonds, treasury bills. There are quite good rates in that
All right.
space right now.